All right, guys. Good morning. Hope you guys are doing good today. All right. Yeah, so look at Nvidia pumping up a little bit this morning, all the way up to 121s, dragging the rest of the market up. You can see we kind of have Tesla up here. Here's the SPY itself. SPY getting close to lifetime highs again today, man. It's been breaking lifetime highs day after day. And this is on the heels of GDP tomorrow. We got GDP tomorrow. We have Jobless Claims, GDP, Philly Fed Index, I believe. We also have Jerome Powell doing a speech opener. And then we got a bunch of other stuff, too, I think, coming out. All right, so get the scroller up here. Yeah. What's up, Tommy Pond, JP Sparsh, Nelson, Freddie, Keegan, Victor? Hey, good morning. Victor says, one of the best people out there. I try, bro. I really do. I try. I think people can see that, you know. Nvidia testing this previous closing price. I think we did make money yesterday. I think, right? On Top Step X. Let me see. Let me make sure. Yeah. So yesterday we did make some, I think. All right, guys. Good morning. All right, what's up, Rob? Yeah, so Nvidia pushed it up. I'm going to try to see the stock market news today and what we got going on. So NBA 30-year mortgage rate came out this morning. It showed up at 6.13%, a decrease for the second or third week in a row. NBA mortgage rates. So mortgage rates came out, and it's good. So now with my rental property, we are effectively past. So basically, a lot of stuff happened. So I'm buying this rental property, and what's going on in that purchase is that we were in the option period, right? But my wife and I are super careful with buying properties regarding mold, right? So we got to make sure there's no mold, right? It's something that we do anytime we buy or anytime we want to get something like a house checked out. Like we test for mold. It's really, really important too, because if you don't, you can get stuck, you know, and mold can be incredibly expensive, right? So basically, we did the inspection on this rental property, and we got, again, like I said before, originally it was listed, we got it for like 20% under list, right? And it was like the third or fourth property that we had put an offer on. And the reason we were doing it like this is so that we could, you know, get it cheap right now. Like right now, interest rates have been high. People are not able to buy as many houses. So a lot of good properties have been sitting for long periods of time, right? And so what my plan was this whole time was to come in, we could put a cash offer, get it for 20% less, and just put low ball, basically continue to put low ball offers, advertising quick close. Like, yo, we can close quick. You know, there's no mortgage contingent, you know, clause of the contract, to where like they don't have to worry about the contract falling through because of mortgage problems, and they don't need an appraiser out there. Like they don't need all that stuff that takes a lot of time. And so yeah, we put an offer in like 5 different properties. We finally got one that, you know, we put in an offer, they countered, and we basically kind of hardlined them, and we're like, nope, this is the max we're going. And they were like, okay, you know. So I guess like that property had been sitting for 3 months. And so anyways, we get the inspector out. The inspector finds like 4 or 5 different leaks in this property. So he finds like 4 or 5 different problems regarding like leaks. Specifically, he saw humidity. When they did the inspection, they saw high humidity in the kitchen above the master bathroom. And so the first thing that Carol and I say, it took a little while to get our mold guy out there, because we do have a mold guy, you know. So it took a while to get him out there. And, you know, basically we were willing to walk away if they didn't let us do what we wanted to do regarding testing. We needed to make sure there wasn't like a big mold problem throughout the house. Like we needed to make sure that there wasn't some massive mold issue in the house. So anyways, we got our mold guy out there. We got them to deal with us and extend the option period, because originally the option period is only 5 days. We got them to extend it. Anyways, eventually our mold guy went out there and basically said the only part he found mold one was the kitchen, but he thought the kitchen cabinets would need to be renovated. So he said it would probably cost like a couple thousand to do. And so we asked for $4,000 off the price again, which makes our, and we were going to be honest, like we didn't tell him this, of course, but Carol and I were going to redo the kitchen anyway, because the kitchen's the only old part that probably needed a new kitchen and a new island regardless. Right. So building permits just dropped. It came in at 1.47. Speaking of real estate. Anyways, now the option period's done. We got a good little chunk off the price again. And so, the good thing is, like, the question is, with low interest rates like this, the reason I'm talking about all this is because mortgage rates came out again today. And so all these properties that have been sitting for like extended periods of time in the real estate market, residential market, when mortgage rates fall down, the Fed cut rates 50 basis points over the next 3 to 6 months or longer, we're going to see those low rates trickle, not necessarily low, but lower rates trickle into mortgages and auto loans and all that stuff. And so the big question I have for you all at home is, how does this affect real estate? Like, how does this affect prices is what I'm curious about. Because even if the good thing, and the reason I wanted to buy a property like this is because I'm not convinced prices hold short term. I think there's a chance prices might come back down a little bit. And if they do, it's all good. Like, honestly, if they do, I'll probably pay less taxes. Like, property taxes expensive here in Texas. So like, to put it into perspective, in some places here, property taxes is 2.2%. And so, you got a $1 million house here in Texas. You're going to be paying just in property taxes yearly about $22,000 yearly in property taxes at 2.2% tax rate. And so property taxes is not cheap. And so I'm trying to see the silver lining. But point is, we're past the option period. We're finally going to move on with the closing. We're going to close early next week on the property. And so that's good. Got it done. And again, we'll see what happens. I don't know if mortgage rates coming down is going to help or hurt prices. In theory, the Case-Shiller came out yesterday and it showed 5.9%, basically 6% house price increase in the last year. The question is, in theory, prices would go up with more access to lending, right? Supply and demand, more people buying. Sellers are able to ask higher prices, right? In theory. It doesn't mean it's going to happen like that, though. Hey, what's up, Sam? What's up, Beach? What's up, Pawn? Phil? Radical? Oh, I think I have monetized. I'm not 100% sure. Yeah, we're monetized. Yeah, today, again, this whole week's been kind of boring. Not a lot of economic reports and data. But does the SPY break lifetime highs today? Is what I'm asking. What's up, Johnny? Does the SPY break lifetime highs? Basically, again today. Look at Nvidia push. Nvidia at 121.20s. So Nvidia making moves up. What's up, Bernardo? And again, my question to you all is this, chat. Do you think real estate prices go up or down? Having a mole guy? Oh, dude, it's not a flex. It's not as big of a flex as you think it is, Spar. The reason it's not is because, again, like, my house was like a zoo growing up. Like, my dad's a falconer. And so my dad, like, raised quail. We had snakes. My dad raised falcons. We had cats. We had dogs. We lived in an older house. Growing up, my house was not new. Growing up, it was old. Definitely was mold. Mildew it smelled like mildew. It was my childhood home. And so with that, I'm not allergic to anything. Not that I know of. I'm not allergic to anything. I've never been allergic to anything. I've never had any type of allergic reaction like that to anything. But my wife, on the other hand, she definitely grew up a little bit nicer than I did, is what I'll say. But she's super allergic to mold, right? So she's super sensitive to mold. We have had consistent renovations that we've needed to do regarding mold. And so, yeah, we got a mold guy, and so the first thing we did when we were buying this investment property is like, look, and anyways, the mold guy tested everything, and the house is clean for mold, except for that one spot in the kitchen that we were going to tear down anyway, and we got a price reduction for it, so it works out. Yeah, GDP's coming out tomorrow. Yeah, well, I ain't about to buy Dr. Crypto. I'm not buying a property anywhere overseas. I'm good. There's not enough benefit. There's two landlord laws are kind of iffy. You know, again, I'm not even, you know, no offense, but it's just not something I'm gonna do. You know, good luck. I wish you the best. You know. Although I do have some family in Canada, kind of family. Like they're kind of like they're in-laws. Like I have a sister-in-law, or maybe not a sister-in-law. It's my stepdad's kids, whatever they are. I guess one of them's my nephew-in-law or something. But he recently passed away the last year. So rest in peace to Stan. Good dude, just a good guy. Honestly, I was a little jerk. Teenage John was a little jerk. I promise. And he was patient. So shout out to Stan. You know. Woke up early for no reason. What? Because we don't have any economic reports? It's just boring today, bro. Listen, I'm not saying the market's going to be boring, but the economic data is boring today. There's just not again, the last few days really have been slow. Today we had building permits, new home sales. Again, we had 30-year mortgage rate come out. I'm hoping we get some big stuff going on in stocks today. I think we have MU earnings after the bell today. Not big enough to really cover necessarily, but you know, worthwhile to pay attention to, I think. When does earnings season start? I think earnings season's it's getting kind of close. So we got BlackBerry, Costco on Thursday after the close. Still not really big enough. Carnival, Track. Yeah, I'm pretty sure earnings season start. I always look at JP Morgan because typically when earnings season starts, every quarter, right? Earnings season happens quarterly. So every quarter earnings season happens. And so one of the first string of results that we get every earnings season is bank results. So like JP Morgan, Chase, Wells Fargo, Citigroup, they all drop on like the Friday preceding Tesla, which is the biggest, one of the bigger ones, you know. So JP Morgan earnings are October 11th. Oh no. Oh no. Okay, good. All right, good. Yeah. Again, I'm gonna be. My mom's gonna be staying at my house. You know, the Cybertruck event's gonna be. Does anybody know what time the Cybertruck event is gonna be? Or not the Cybertruck, the Robotaxi event, man. I think I'll still be able to cover it, but like, I need to know. Like, I wish they scheduled it so I could see what time it's going to start. So, yeah, the Robotaxi event is going to take place at Hollywood Movie Studio. And then earnings for Tesla are going to be in the coming weeks afterwards. Hey, what's up, Tony Hawk? Woke up for John's voice to lull me back to sleep. Yeah, I guess it is stepbrother. Alright, guys. Hey, what's up, Poker? Yeah, we're here. Again, it's still pretty early. It's only 7:30 market time. I might start trading a little bit right now, though. Alright, so look, we are going to pull up. I'm not sure which, I got to figure out which account this is. So we got into 2 contracts on a combine account. It's a challenge account. So alright, so we just took a piece off of that, locked in something. If we get deeper into the profit, I will add to it, but I will add to this. We got 2 contracts now. It's a little early, and we're kind of like lowing down. You can kind of see my string of trades yesterday. It was pretty good. Like look at this string of trades. So out of the last 20, we've had 1, 2, 3, 4, 5 losses out of 20. So 75% accuracy trading this yesterday. So but pretty good. I think we've dropped enough, and we might kind of range back up. But even if we don't, I will cut this quickly, and we already took $25 in profit off. I just like a little bit more, you know. The range is just small on the NASDAQ right now, though. Alright, yeah, now I'm trying to be patient. I'll try to lower this so we can actually still watch it and I can still trade. Like, I'm up a bunch in all of these, right? So, I do want to give it time, but I also kind of fear it breaking down under this level right here. If it does, that's bad. Yeah. Again, this is a challenge account, so I'm going to trade it a little bit differently than my normal account. We'll take some swings. There's 4 contracts. See, the problem I'm seeing right now is Nvidia falling down. I'm going to have to unload some of this. So we just took some of that off. The problem is Nvidia dipping down here. I think Nvidia will probably continue to run, but we just lost about 130 right there. Lou. I don't know much about LEU. What is this company? Centrus Energy? Is it oil related? So we got a little bit of a pop back up here. This little retracement is what's going on. Try to add one more. I know I'm kind of mismanaging it, but I'll update you guys on what happens. And I'll be honest, whatever happens. I know my trading goes really well after the opening bell. It's just I think sometimes I get a little bit antsy and start trading too early, and I get back some of the profit. So, any news today? Not any major news. All right, so we're actually green now. We're up in this trade. All right, we just locked in some profit. Locked in more profit. Locked in some more profit. Trying to see how much it says. I don't know how much profit it was. Okay. Yeah, so far we've locked in about 75 to 150 in profit. First company to part with the world leading thorium. Yeah, I'm just not super familiar with a lot of those. You know, I'm also looking at Tesla today, and again, Tesla ahead of this Cybertruck event has been pumping, man. Like, if you look at Tesla on a 20-day chart, look how strong Tesla's been. Tesla's up 25% in 20 days, which is a good percentage. 25% in 20 days is big. You know, that's a big gain. Yeah. Yeah, I'm trying to figure out some stories too. And remember, the big difference between Remember, so PCE data drops the day after tomorrow. That's actually the biggest day of the week. We do have GDP data. I believe it's second revision GDP data tomorrow. Jobless claims, durable good orders. But the biggest report is PCE data. So again, like a lot of the time, my biggest streams here regarding inflation data are what's called CPI reports, right? So last one, we got like 20 or 30,000 views. What the Fed prefers to use is PCE data, core PCE specifically. And core PCE measures the change in the prices of goods and services, but it excludes food and energy due to the volatility from it. It's broader. It captures consumption expenditures, including those paid for on behalf of households, like healthcare covered by insurance. It's considered more representative of overall economic activity. So basically, the Fed likes to look at it more to gauge the economy over something like CPI, which is actually like a much more watched retail metric, right? So CPI, very retail heavy. Like a lot of traders use CPI to gauge retail and kind of see what's going on. And again, just to update you guys on my trade. So since I lost that like $125, I ended up making 55, 5, 10, and 30, and then I'm up some on this last trade as well. So again, I'll keep updating you guys on those gains. So we're basically flat on the day right now is what I'm seeing. We're up about 100 plus 25 unrealized. We lost 125, so we're about flat. But CPI is based on a fixed basket of goods, just to put this into perspective, meaning the weights of different categories like housing, food, transportation are relatively constant. Core CPE or PCE adjusts the weights of categories over time. And so that's what another reason the Fed likes using it is because it adjusts the weight of the categories over time on changing consumer behaviors. Like as consumers change their habits, PCE gauges the new, more relevant data. So it reflects that, making it a more flexible measure. CPI is the more commonly cited inflation metric, though. So again, like we get more people here for CPI generally than we do for PCE data. And again, the reason I'm going over this is because PCE data drops Friday. Biggest report of the week. It's the Fed's preferred inflation metric. If you want to know whether it was a good move to cut rates or not, let's watch PCE data and see what it looks like over time. So again, CPI, the more retail watched gauge. Core PCE preferred by the Fed. It assesses inflation and sets monetary policy as it better reflects long-term trends, is what their argument is. And I'm not even saying I necessarily agree with that. Nvidia to double, you need 1 trillion to come into stocks. Is that even possible? Well, yeah, it's possible. Is it probable? I don't know. So we're also, so Bernard Arnault, also not one of the richest people, or tumbling down the list of the world's richest men. $54 billion collapse. LVMH is the symbol. See, it never lets me look at like, so again, after this big tumble, so again, he went down the list. All right, so we just got out of another $40 position, making us effectively green today on this account. So made our money back. Again, we just cut it. Now we're effectively green on this account. But yeah, so Bernard Arnault, the founder and CEO of LVMH, which stands for, if you don't know, this is one of the richest dudes in the world. Louis Vuitton, Monet, Hennessy is what LVMH stands for. He owns all of that. Louis Vuitton, which Louis Vuitton prices from somebody that has a wife, right? Louis Vuitton prices, they've gone up since the pandemic. Again, the stimulus checks, quantitative easing, money printing, low interest rate environment of 2020 caused a lot of this stuff to go up. Rolex prices, freaking doubled. And again, another one of the things that went up drastically, Louis Vuitton. I remember like to buy a nice purse. And the only reason I know this is because I have females in my life, right? I have some ladies in my life, if you don't like the term female. But anyways, the reason I know this is because, I have women in my life, and I have watched the price. So before, you used to be able to get like a nice Louis Vuitton purse, like a big purse. If it's bigger, it's more expensive, Louis Vuitton wise. You used to be able to get a nice one for like $3,500, right? $3,500. Now you want to buy a big old purse, that thing's going to be $6,000-$7,000, And so the prices have certainly went up for Louis Vuitton in the last 5-6 years. And again, to a certain extent, it trends with inflation. A lot of people, and again, I know I could hear it already. I could hear people already. They're going to say, oh, what a waste of money. right? And again, I would argue this is more a waste of money than something like a Rolex, because a Rolex will generally appreciate over time. It'll keep up with inflation, and the resale value is very good for Rolexes. Like a lot of the time, you can buy a Rolex, wear it for 3 years, 4 years, 5 years, sell it for more than you paid for it. And so you basically got to wear a Rolex for 5 years for free. And that's what a lot of people don't understand, is that they hold value. And so, you could buy it, wear it, sell it, as long as you don't break it, But anyways, so Bernard Arnault went from the richest person in the world to the fifth most after a 20% drop in LVMH, resulting in a $54 billion cut from his net worth. He oversees dozens of brands, specifically Monet Hennessy, Louis Vuitton, Dior, Givenchy, and Fendi, worth an estimated $231 billion in late March. He's now down a little bit after that drop. He's now only back up to the $180 billion. Oh, poor soul. What a terrible thing to happen to him, man. I mean, a dagger to my heart, guys. So again, for a while he was ahead of Tesla CEO Elon Musk, founder of Amazon Jeff Bezos, Meta CEO Mark Z. But he's since fallen in that race. So yeah. I like Coach. Yeah, well, there's a lot of brands. This is the reason I don't invest in luxury brands, right? Including LVMH. I don't invest in this. The reason I don't, and I get it, right? As somebody that likes watches, I understand wanting a Louis Vuitton, right? Like I do. I really do. I understand it. If you got the money, like do whatever you want to do. Right, I really do genuinely understand. It's kind of like a flex, right? Men wear watches, women wear purses, and that's normal, Either way, it serves the same purpose, regardless of whether anybody wants to admit that or not. That's what it does, And so I get it. I really do. I understand. And some of them can hold their value as well. You can resell them, Like I don't know. I've never really tried, but I'm assuming there's some resale value for them. But the problem with investing in these brands is that trends change so much, and the reason I know this is because 10 years ago, maybe, I remember one of the first semi-expensive things that I bought for my wife, Carol, was a Michael Kors purse, right? And at the time, John, a decade ago, at the time, I spent I think it was $600, $500, $600 on this purse for Carol. And at the time, I was gutted from this purchase, right? I wasn't gutted, but it was a significant purchase, $500 or $600. I was not, I wanted to do it. It was a gift, and I know she wanted one, and it was a Michael Kors purse. And it was $500 or $600, and when I bought it, the store was packed, right? Everybody, there's tons of people at Michael Kors. It was the big brand or whatever. Michael Kors is now failing. You try to go to Michael Kors, nobody's there. They got a store in the mall. I don't see anybody in there ever. And so the appeal of Michael Kors is going way down. And so these are a brands change. There was what is the Mueller watch? Frank Mueller, right? Frank Mueller watches. I heard a story on social media about Frank Mueller. Yeah. Yeah, for sure, Daphne, 100%. Yeah. Yeah, that's probably true. But Frank Mueller watches, right? This is what I heard. And again, I kind of saw a video about this on social media, to be fair. So I'm kind of taking this story that I heard somewhere else. So Frank Mueller was a big brand in the early 2000s, right? All the rappers were wearing Frank Mueller. They were putting diamonds on it and stuff. And Frank Mueller was a big watch brand. And everybody had one. Everybody wanted one. They kind of looked like this. They were kind of like Richard Mille. They looked a lot like Richard Milles, right? But they weren't nearly as expensive as modern day Richard Mille. If you want an RM today, you're gonna spend at least $100K on a Richard Mille. But this was a watch that looked a lot like Richard Mille. Here's a Frank Mueller. But it wasn't as much. It was you probably get one for I don't know, anywhere between 10 to 50K. Is what you're going to be paying for Frank Mueller. And what would happen is rappers would put a bunch of diamonds on them. That's what they do, right? They want it to be a little bit more flashy, so they put diamonds all over it. Well, Frank Mueller got weird about it. So at the time, Frank Mueller was huge. It was an up-and-coming watch brand. Frank Mueller got weird about unauthorized dealers throwing diamonds on Frank Mueller watches. And so Frank Mueller started going around and hitting all these dealers, all these watch dealers, the dealers that are selling their watches, right? They started hitting them all with $1 million plus lawsuits, essentially suing the dealers that were giving them business, selling their watches, right? Started suing them for it. And so one of the consequences of Frank Mueller suing them is that the dealers stopped selling the watches. They said, okay, you're going to sue us? Like, we're just not going to sell your stuff anymore. And this happened basically universally across the country to where they stopped buying the watches because, again, Frank Mueller's going around suing people. They stopped selling the watches. And to where you fast forward, 10 years later, and Frank Mueller's sales have gone drastically down. Like, nobody buys Frank Mueller. It's not the cool watch anymore. Nobody talks about it. Rappers don't even wear it anymore. And ultimately, the reason for it is because they got weird with their dealers. They got weird with their dealers. And again, as a watch guy, putting diamonds on it's a waste. Nvidia just broke highs, right? Nvidia just broke highs. Putting diamonds on watches is a waste. It devalues the watch drastically. But at the same time, you got to let people do whatever they want to do with the watch. If they're paying for it, they should be able to do it. If somebody hires them for a job, like a dealer for a job, and it's putting diamonds on a watch, you can't knock the person that was hired to do it, So it kind of goes, don't bite the hand that feeds you. Basically, Frank Mueller watches. Let me see if I can find a graph. I have this site that I can get graphs from. I'm curious about if they have Frank Mueller. Yeah, they do. Okay. I don't even see a graph anymore, unfortunately. Yeah, I don't even see a graph for Frank Mueller anymore. But point is, they went way down. Anyways, Nvidia just broke highs again and got up to 121. And so that's the reason I want to invest in luxury brands. There's too much risk in like price changes, brand changes. Fashions change, trends change. I say it once, I'll say it again. Young people want to use different brands than their parents. Like I might love a specific brand. When my kids get old, they might not want to wear that brand anymore. And so they're going to go to a different brand. And then what that means is that the brands that I currently use and love might lose value over time. And so why would I invest in something like that? It just doesn't make sense. Generations change and they're interested in different things. And so the only difference is legacy brands. Like legacy brands like Nike, Rolex, stuff like that. Like those are generally going to be fine. But the brands that are the biggest risks are brands like, to be honest, like Lululemon. Right, like Lululemon recently sprouted up last decade. Very new, very young. Got big during the pandemic when everybody had to stay home, and so what became popular? Leisure wear, sweatpants, yoga pants. But over time that's going to change. And with that said, I've been saying this for years. Lululemon has dropped basically 50% in the last 7, 8, 9 months. So, love my Submariner. Yeah, I recently got this one. I'm a watch guy, I don't know how long I'll keep it, but I recently got that one. That's pretty cool. Coinbase shares, yeah, Coinbase. I mean, didn't Bitcoin run? So Bitcoin back up to almost 64,000. Bitcoin's been in a sideways range though for so long, man. Like again, here's Bitcoin's range. It's been sideways for so long. It's at 64,000. It's been downtrending though. So it's been downtrending. Like you can kind of see, like this is the trend. And so you could also argue that this is a bull flag. Whatever you want to argue, it might be possible. Porsche 911. Oh, you're definitely losing money on a Porsche. I'm over 40 and still wear clothes from high school. I mean, I don't. Mostly just because when I was in high school, like we had super, super baggy pants was the style. You know, like before that we had Jinkos. I wasn't in high school, but we had Jinkos, which were like funnel pants, you know, just ridiculous looking. If I showed up, my daughter would hate me if I tried to throw on some Jinkos and meet up with them. You know, go around their friends, dude. Again, like I said, I would be like this guy. Like I said, anytime I say the word dope, like, hey, that's a dope watch, I feel like this guy right here. You know, that's how I really genuinely feel every time I say it. And so I can't help it. You know. Jinko? No, when I met Carol, Jinkos weren't cool anymore. I met Carol, yeah. I met Carol, we were both young, but not that young. Yeah, I got some cool watches. Like, being into watches, though, it starts off small, like, right? Like, what started it was my dad gave me a watch for when I got married, right? And again, like I said, like, it's not like we were, like, super rich growing up. So my dad gave me, like, a Citizen watch. It was like, you know, Citizens are, like, they're nice. They're not, like, super deep. Like, you might be able to get one for, like, $100. Right, so my dad gave me a Citizen watch that he wore, right, when we were getting married. Really what happened is that I didn't wear watches at all. When I got married, you know, Kara and I got married at the courthouse, right? And again, now here we are freaking a decade plus later. And so sometimes the marriages that work out are marriages that don't have super big weddings, you know. And in fact, I think it's also there's probably a negative correlation. The bigger the wedding, the less successful the wedding or the marriage probably would be. The smaller, you know. Anyways, maybe I'm just justifying having a courthouse marriage. But back to the point. My dad gave me a watch. It was a Citizen watch. It was his watch. He let me wear it because I didn't have a watch on when I was getting married. And so I started buying watches there. Carol got me a Watch Gang subscription. And again, never use a freaking Watch Gang subscription. They're going to market to you like you're going to be getting Rolexes every month. Watch Gang, it's basically like $100 a month. And, you know, they send you a new watch every single month, right? And their marketing is going to be like, oh, you're going to get a Rolex, which, of course, I knew I wasn't going to get a Rolex. But I thought I would at least get, like, Citizen or, like, Belova or like whatever the watches, because their whole marketing gimmick is like, hey, we'll send you a watch worth $200 to $300 for $100 a month. And so I'm thinking I'm at least gonna get like, even I know they were gonna be cheaper watches, but like relatively well-known name brand watches. Instead, they send me a bunch of watches nobody's ever heard of with crazy ridiculous price tags thrown on them. Wait, what MetaStream? I'll have to look. Pawn. Yeah, hold on, wait. Meta's annual Developer Connect conference is today. It happens at 1 p.m. Eastern and will be streamed live on Facebook. They're going to be doing AI stuff. I'll have to check it out. Yeah, for sure. I'll have to check it out. But anyways, point is, you buy a Watch Gang subscription, and they send you, like, the biggest no-name watches you've never heard of. And I still have some of them. I don't really wear them as much anymore. But, like, basically, I'm pretty sure what Watch Gang is doing is, like, finding watches that have no value, that have no resale value, that are very cheap watches, and then they're throwing ridiculous price tags on them. Like, if I buy a donut, and I put a $500 price tag on that donut, does that make the donut worth $500? Of course not, right? But that's essentially what Watch Gang is doing, right? They're taking cheap watches, they're putting ridiculous price tags on them, and then they're marketing like, oh, we're selling $400 watches. It's like, well, I guess you could say that, but you just found a creative way to say that. The watches really aren't worth $400. If you try to sell that watch, you could get that watch and sell it immediately brand new. You might get like $20 for it, $30 for it. So anyways, point is, don't get it. It's a waste of money, you know, unless yeah. But that's kind of what started the watch interest for me, you know. And then it kind of slowly progressed to where I started kind of like buying more expensive watches until I finally just kind of bought some cool ones. Anyways, Nvidia at 121, Bitcoin down a little bit over the last like year, but the range is so consistent. So my question with Bitcoin is this: do you think it's safe to buy these little pullbacks here? When Bitcoin drops down there, look how consistent that range is. Like, this is a very consistent range. And so in theory, you could buy these lows, cover at the top, buy the lows, cover at the top. I wonder, like, I've never really tried swing trading Bitcoin, and I'm assuming there's risks, obviously, swing trading Bitcoin. Do you need to return the watch every month? No, so you're just buying the watch. I mean, to be fair, Sam, the last 5 minutes I was mostly talking about watches and Watch Gang. Now, I went and talked about Meta Conference because I read a message about it, but then I reverted back to the watch thing. So I think I've been pretty consistent there. But if not, it's all good. You know, I'll work on it. Nvidia, trying to push up to 121s. Now, Nvidia is kind of what's dragging the market up, but the highs of Nvidia are currently just under 122. Over the last few days. So I think 122 is kind of a big level. Like, you can kind of see it here if we zoom out and put a 1 minute chart up. This is the highs that I'm really watching. So if we zoom out, you can kind of see the highs from yesterday. Let me see if I can zoom in a little bit better. And I'm going to just call it 122 in price. There we go. MSGM micro float to the moon. Not a 3-day-old donut. Bro, trading Bitcoin is very stressful. It's safe, predictable. It's not safe. It might be predictable, but it definitely ain't safe. Bitcoin can drop huge percentages. Yeah. Yeah, all good, Sam. Like I said, I got my ADHD brain, bro. So, like, I'm going to go off on tangents and random topics. Usually I do a good job, I think, of reverting back to the original point. I might just have 5 side stories before that, you know. And so that's how it is. And again, I'll work on it. I hear you. I'll work on it. Tesla at 260s. So, again, we'll see if Tesla, the high of the last, let me see when this was. The high of the last year and a half is right around $300, maybe longer than that. High of the last few years is right around $300. We're at 250. If I pull up Tesla here, you know, Tesla at 260s. So I mean, maybe not 260s, down a little bit today. So it's still got a ways, but obviously it's strong. Again, what I think here, though, chat, to be honest, I think it could be buy the rumor, sell the news event. I'm not going to short it because I think that's risky too. I don't know. Part of me is skeptical about the robo-taxi event. And I hope I'm wrong because, again, if I could buy a Tesla and let that thing go hang out and make money for me while I'm working, you know, my car's driving around town picking people up, then I would be interested in it. But it sounds way too good to be true. And so, you know, I just wonder about the semantics behind it and about whether they can actually effectively accomplish that. So I'm skeptical, I guess, basically is the point. Like, it looks interesting, but I'm skeptical. And I think you should be skeptical too. It sounds too good to be true, you know, and I hope I'm wrong. I think if it does work, even if it does work, right, you got to think about the consequence of if they are effectively doing what I just mentioned, which is allowing your car to basically work for you while you're doing other stuff. If it does work, that market's going to be incredibly saturated very, very fast, right? So if they do actually allow you to do that successfully, that market's going to be saturated, which, again, will be good for Tesla. Regardless of whether it's saturated or not, it doesn't matter for Tesla. Tesla's going to go up almost certainly if it executes the robo-taxi successfully. Again, it generally seems too good to be true. And I hope I'm wrong. I hope they do it, you know. But the overarching point I'm making about Tesla here is that I'm worried it's going to correct a little bit after the event. So I think it might go up leading into the event like we've seen, but then after the event, for whatever reason, it comes back down. And Tesla historically has behaved in just that way, where it goes up, you know, it goes up in anticipation of big events, and then it kind of corrects on the afterwards. So what do you guys think? I'm afraid MU sells off after earnings, even though they could be fine. MU is one of those microchip stocks that I just don't know as well. Right, I just don't know them as well. They look good over a 15-minute chart, and again, they could be buy the rumor, sell the news as well, leading into their earnings event. They've gone up. They formed a bottom around the 10th, so around 2 weeks ago. But since then, they've moved up a pretty big percentage, about 10% or more in the last 2 weeks. So it could be a buy the rumor, sell the news event as well. Their earnings are today at 4 p.m. for MU. And again, we'll see what happens. The event is October 10th, Daphne. I want to correct back to 230. I'll be buying again. I sold Nvidia at 120 yesterday. Missed the little gains, but not too bad. Bro, your car would show up back with your house seats missing. People would mess that thing up. Well, no, I mean, they would be liable for it, I'm sure, you know. So, like, it'd be kind of like Uber, right, where, you know, if you mess with an Uber, you're going to get charged for it, right? And that allows people to have some protection there. Not always, of course. There's always horror stories and stuff. But generally, yeah. Tesla continues to run through election. Elon will pull another. Maybe. We'll see. Is it true that every time an insider sells, it creates dilution because those shares are not locked up? So because the CEO is done selling, that's not necessarily bullish. Just not as bad. I guess the question is dilution in what? When the CEO sells shares, they're not adding shares to the float, you know, or to the outstanding shares. Those shares are already there. The outstanding shares, when you hear something say outstanding shares, like market cap is outstanding shares multiplied times price, right, is what the market cap of a stock is. Included in the outstanding shares are CEO-owned shares, like shares owned by the CEO. The only way dilution in a stock happens is if they add more shares to the float. They add more shares to the outstanding shares. And that typically only happens during offerings. Yeah, it's a microchip stock. I think MU will dip after earnings just like chips did, like Nvidia with good numbers. Yeah. Boards usually discourage insider sales. Well, yeah, they don't want CEO to sell. I mean, it's a bad sign if CEO selling shares, even if they're trying to kind of like lock in some profit. But the robotaxi vehicle is seriously custom made to be autonomous. I think there's almost no chance individuals would be able to send their current Teslas off to make money for them. No, not their current ones. What I'm talking about is the actual robotaxis. I guess the point you're making is I'm not going to be able to drive around in a robotaxi after, you know. And I guess, like, in theory, the people that are going to be buying robotaxis the most are businesses, right? Like businesses that, like, an example of this is, like, say I get hired by a big firm, but parking is like half a mile away or more from the actual office, right? In theory, the big firm could have a fleet of robotaxis that come and pick employees up and drive them to the main office. And maybe that's one of the best use case arguments for robotaxis. But again, like if robotaxis are relatively cheap, let's say they're like 30 grand, you know, I think a lot of people are going to buy that and use it as a business opportunity. You know, they're going to take off regarding Uber and all that stuff. And again, I think if it does work, it's going to be very saturated, which is still good for Tesla. Saturation means sales, you know, so I mean, either way, it's good. It's going to be competitive for people, I guess is the best word. Nice, William. That's a cool watch. I don't know a ton about them. I'm kind of new to watch. My next watch will probably be an Omega. You know, I like Breitlings, but I can't justify the Breitling brand. Like, Breitlings are great watches, but like I can't justify buying one. You know, like I don't want to spend $6,000-$7,000 on a Breitling. I just don't. You know, I don't know what it is. They're cool though. Maybe one day. I know I talk about money, but I don't have that much money. Like, I don't have enough money to where I can just kind of flush $6K away, you know. Hey, Carol. Hey, come here. No, I don't have any APs either. APs are a little bit too expensive for my blood. Hold on one second, guys. All right, guys. What's a big watch? You talk about Breitlinks. The Tesla event is October 10th. October 10th. And again, like the reason if you hear me talking about watches, and you're like, John, shut up talking about watches, right? Like, I get it. I know we're a stock channel. The reason I'm talking about watches, and a lot of people don't understand this, is that watches can be investments. Now, they're not perfect investments, but they hold value. That's why people buy watches. That's why the wealthy buy watches, is because they can buy watches and then hand it over to their kid one day. And it's going to appreciate similar to the S&P 500. It's definitely not as good as the S&P 500 in terms of, especially like consistency. But it's still kind of something in which holds their value. And a lot of people don't understand this. A lot of people act like you buy a Rolex and you're just kind of flushing it down the toilet. I take a buy the dip scenario, right? So here's the Rolex watch market. You know, let me see if I can get it to load here. Now, different watches perform better than others, right? But I'm looking at it in terms of like a general investment. Are we lagging? Can y'all hear me? Mic check 1 2 1 2. Can you hear me? I don't know if my thing is down. Mic check 1 2 1 2. Okay, good. All right, yeah, I don't know. Maybe it's just the site that I'm on right now. The API is down, but yeah, like point is, yeah, like again, it looks like the site's just a little down. Okay, so here you go. So here's a good example. So again, you have to understand, like, Rolexes can be investments. If I put up a max chart, you see a very common trend. The first thing is that in the last, like like 7 years, Rolex watches have basically doubled in value. Meaning, if you bought a Rolex watch 7 years ago, you have 2x your money in 7 years. Now, is it as good as the S&P 500's gains? Of course not. But I take a buy the dip scenario. Like, I take a buy the dip logic. So we've pushed up a lot. And again, am I buying at peak mania? No. This is right after 2020. Pandemic happened here, right? So the pandemic happened there. Quantitative easing, stimulus checks, money printing, all that stuff caused Bernard Arnault, like Louis Vuitton, Rolex prices to super high trend. Like, you can see the angle and how much watch prices appreciated in that period of time. But now we've been downtrending and we've lost basically 35% of our, value. So a buy the dip logic makes sense to me. And again, it's just like anything else. If I'm going to buy the dip in something like this long term, I got to be willing to hold for 5-10 years. And that's fine, because again, you get to wear a really cool watch for 5 to 10 years, and then basically double or triple your money. I think it's a good argument. I think it's a good argument. But of course, you don't freaking know. Rolex has a better resale value than something like Omega. So it's a little different. Need Carol's pick of the day. Yeah. Yeah, watches, prime real estate, art. There's a lot of different markets that people don't understand. There really are. But of course, nothing's risk-free. And so there's always risks. All right, guys, Nvidia's up there. Wait. Did I forget about... Okay, no, I think I exited my trade. Okay, good. Honestly, my buy the dip would have worked too, though, man. Remember, I was buying this dip. And I made money, to be fair. I made my money back. But I was buying in, like, right around here. Right around here. Might have been right here, though. I don't remember where I was in. Let me see. My entry price was $21.27. Yeah, so I was buying right here, dude. Oof. Should have held, man. One of my biggest problems in trading is I don't hold it long enough. So again, I was buying these here, right at the bottom of the range, and you can kind of see why, right? Like, I'm attacking a range. I'm trying to buy at the bottom, cover at the top of the range anytime I can, you know. And so again, that's kind of what we're doing here. We're trying to buy the bottom of the range, sell the top. You can kind of see it reflected in like Nvidia as well. Everything has a range. Sometimes it's a good range, a predictable range, an obvious, like, self-evident range. Sometimes it's not. But even like Nvidia, here's the range, right? So where should you buy it in theory? Oh wait, that's a bad question mark. Where should you buy it in theory? Bottom of the range, bottom of the range. Where should you cover? Top of the range, you know? And everything kind of has that. Bitcoin, over the last, really the last like year straight, I pulled up a monthly chart, or no, I'll put up a daily chart. Bitcoin, basically since February of this year, has a range. You know, sometimes it's not a completely horizontal range as well. Sometimes it moves up or down vertically like this. You know, and so in theory, where should you buy it? Short, bottom of the range, bottom of the range, bottom of the range, bottom of the range. And just waiting for it to go to the bottom of the range and buying it is probably a strategy that a lot of people use on a regular basis. You know, it's probably a strategy a lot of people use on a regular basis. You know, you can find these ranges in everything. Short term, long term, it really doesn't matter. Like, I can look at Meta. And so again, here's a daily chart on Meta. Let's find the range, you know. First of all, this last little run is a little bit more difficult. But, you know, where's the range? Bottom of the range, bottom of the range. You know, you can use the 200 EMA to identify the range, short term and long term as well, and it's helpful. The problem is everybody wants to somehow catch like this breakout right here. You know, so you can see the breakout. Here's the highs prior to this, right? So here's the highs. The problem with trying to catch that breakout where, you know, like you're trying to essentially break past this here. You know, a lot of people try to profit from stuff like that. The problem is that there's so much risk in that situation. You know, like buying highs is a risky endeavor. The reason it's risky is because that's the very top of the range. Like, we're talking about ranges. Highs are the very top of the range. And so that kind of is the opposite of what a lot of people should be doing. And again, it's one of the reasons a lot of new traders find themselves in these positions where they're trying to day trade or swing trade or whatever. And they just start buying high of the day breakouts. Because I would say like high of the day breakouts, low of the day shorts are the most marketed trading strategy in the world, right? Buying highs, shorting lows. But when you simplify it, you're buying the top of the range, you're shorting the bottom of the range. It's when it's the most extended in that direction. It's the worst time to do it, but people get stuck in it. A lot of new traders get stuck in it. They keep buying highs, they keep losing, it keeps dumping on them, it keeps rejecting at the top of the range, and they don't understand why they're not making money. And a lot of them are just being too stubborn trading highs and lows versus attacking ranges. And I think that's something that really, I talk about this every now and then, but it's something that really genuinely helped my trading is when I stopped focusing on like buying high of the day breakouts. This was years ago, but you know, for a period of time, I was just buying high of the day breakouts, shorting low of the day shorts, trying to catch momentum, the exciting thing. And again, sometimes exciting is risky and not super edge driven. Will the money printer turn back on again soon? I don't know, man. I hope not. Like, I'm okay with even the Fed lowering interest rates if they want to stimulate the economy. You know, we got these massive inflation spikes heading into PCE data Friday, right? If we look at a CPI inflation graph, you know, like if we look at a CPI inflation graph, the Fed brought interest rates down here and inflation spiked to almost 10%. You know, but one of the things that caused this specifically here that we bring up a lot, this graph, like you can see that big increase after 2020 was number one, stimulus checks. Free money sometimes has consequences, you know, for the economy. Like giving everybody free money has consequences. Number two, it was quantitative easing. You know, so quantitative easing is a form of money printing in which we create bank reserves and then use those bank reserves to buy bonds mostly, and then that injects liquidity by the Fed into those markets and influences price, ultimately brings interest rates down, stimulates the economy. A lot of beneficial things for the economy, of course, because money's getting circulated in a much more profound way versus without doing it. But again, added money is not always a good thing, and the consequence is this right here: inflation spiking up to 10%. And so I guess with the 50 basis point cut that we got last week, I'm okay with it, I guess. I'm not, again, if it was me, I wouldn't. But I don't want us to, and one thing that seemed good is that the Fed said they're still doing QT, which is the opposite of QE. So if you watched the Fed meeting last Wednesday, one of the things they said was that the Fed is not doing, the Fed is continuing to do quantitative tightening. They're continuing tightening. They're continuing to reduce their balance sheet over time, right? And this is a hawkish stance by the Fed, even though a 50 basis point cut obviously is more dovish. It's a lower interest rate pushing thing. But if the Fed continues quantitative tightening, passive QT, where they're letting their current bond holdings mature and basically like expire and run off, that's good for inflation if they continue to do that. And so I guess ideally, I hope the Fed doesn't print more money anytime soon, because again, that will make inflation spike without question. Obviously, stimulus checks are something that nobody should need right now. Free money's not always good. It's going to negatively impact everything. And so, and I at the same time, I understand why we did it in 2020. I'm not hating on that decision. Like, I understand that decision. Again, would I do it? I don't know. I think it's really nuanced, but I understand it. People were struggling in 2020. It was kind of this weird market that a lot of people were struggling. They couldn't work. It's not that they didn't want to work. It's that they couldn't, even if they wanted to. Businesses struggled. It was a tough time. I'm okay in that regard. But do I want to do it now? No. Do I think it's good now? No. And I hope the Fed should, right? Like, that's a pretty out there thing doing it now. The Fed should have enough discipline not to do it, Why are they stimulating the economy when GDP and everything else is fine with a soft landing? Why do anything? I mean, it depends on what you think. Like bringing interest rates down, I guess, could be defined as stimulating the economy. And I know I use that definition a lot. Like, I call it economic stimulation a lot. But you could also understand that, like, if we put the Fed funds graph up, the Fed's kind of bringing rates back down after raising them really aggressively. So if we look, here's the Fed funds decisions. Again, you can kind of see they raised rates. They raised rates really aggressively after CPI. The graph I just showed you spiked up to 10%. So they say, oh no, we've got to bring interest rates higher, push spending down a little bit, because by bringing interest rates up, doing rate hikes, it pushes spending down and ultimately controls inflation. And so that's what they did. They raised rates really aggressively. And then again, up until this last meeting, I'm not sure why the newest decision isn't reflected here yet. We did do a 50 basis point cut. Again, I'm not sure why this isn't affected by it. But anyways, we raised rates really high like this. And then for the last year straight, up until this last decision, we've been pausing rates, right? So now these rate cuts are just going to bring this back down 50 basis points, down to about there, right? So these rate cuts are going to bring it down. I think we're at 5 3/4 to 5. So we're actually right around here, right around. So we're going to bring, So that's basically what it's going to do once it reflects or whatever. And so whether that's genuinely like economic stimulation is another argument. Like, some people are going to define economic stimulation as specifically like injecting money into the market, right? Other people are going to define economic stimulation as just like a dovish monetary policy stance, like a low interest rate pushing stance by the Fed, which is what the decision was on Wednesday last week. It was a low interest rate pushing thing. So I don't know. I'm okay with, people are going to be pushing for low interest rates. I don't know if it's necessarily good, but it's definitely going to help some people, right? So I can't be too critical of it, because it's going to help, again, the rent market, the big disparity is rent prices versus mortgage prices. Like, how much you're paying in a mortgage versus how much you're paying in rent. And that's been in a really bad state for years now because of this high interest rate environment, because of the Fed fund rate hikes. Interest rates are high. It's not cheap to refinance. It's not cheap to get a mortgage. Businesses ultimately have to spend more because of the inflation. And part of it is inflation problems. Like landlords have to spend more. And so those prices are then passed on to the tenants and through rent, right? If it costs more money to maintain a rental property, landlords are going to bump up rental prices, And so that has made a situation in which it's very expensive to rent. It's even more expensive to to buy a house through a mortgage because of high interest rates. But again, maybe when we see those interest rates coming down, it's going to make that market better. I don't know. I think that's the point of it. But whether the goal and the outcome are the same thing is a different story. So Tesla earnings are mid next month. I think they're like October 22nd. So they're almost exactly a month. Bursch says everybody can live in La La Land and think there's going to be a soft landing. Wake up, that's not happening. What makes you think that, Bursch? Genuine question. I'm not arguing. I'm not saying you're wrong. Just honest question. What makes you think that? What makes you think that we're not going to hit a soft landing? GDP still at 3%. Unemployment's under 4.5%. You know, and again, I'm not saying you're wrong. Yeah, people needed to eat, but didn't need to buy a Rolex. Yeah, but people did buy Rolexes, bro. Again, Rolex prices doubled in the years following 2020. I knew somebody that was in Vegas, right? In Vegas, they have all these luxury shops, like by the Rolex stores and stuff like that. And generally speaking, you know, not everybody can afford it. So a lot of the time, those areas are kind of slow. But after 2020 and the stimulus checks and everything, those areas were packed. Those luxury markets were packed. And so people are people, you know. Sometimes they make dumb decisions, like spending the money they need for food on a fancy watch, you know. Again, objectively a dumb decision. But yeah. Is the U.S. open at the moment? Pre-market's happening right now. The market actually opens up at 8:30. Or at 9:30, I mean. All right, so we do have... I think new home sales coming out today. Let me see. Let me make sure. Yeah, we got new home sales dropping at 10. Not really any 8:30 report, I think. Let me make sure. Yeah, nothing really. We got building permits, which are already out there at 1.47 million. Some ECB members are speaking and stuff, but nothing really big. Buying a rental property in America is no longer viable or profitable at this point in time. I disagree. I don't think so. I mean, there's a lot of benefits of buying a rental property. Like, again, people might use the argument for inflation, you know. But again, so, okay, let's say you buy a $250,000 rental property. Let's say you make about $2,000 a month from that. Okay, so let's say you make $2,000 a month from that. That you're going to make about $24,000 a year. All right, you can take 50% of that off for taxes and expenses, right? And so you're going to make $12,000 net profit every year, right? And that's pretty good. That's $1,000 a month, you know? Then when you consider not just that real estate prices increase, so over $250,000 is going to increase at about 3% a year. We call it 3. It's anywhere between 3 and 5%, but we call it 4%. You appreciate at 4% a year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, you're gonna make about 100, or you're gonna make over $100,000 in appreciation from this rental property, right? So from this rental property, you're gonna make let's say minus 250. You're gonna make about 120 grand in appreciation over a 10-year period. And not just that, right? At that, you know, you use the 1% rule, which means that in 10 years, instead of asking $2,000 a month in rent, you're going to be able to ask, you know, $2,500 to $3,000 a month. And so instead of making $24K a year in gross income, you're going to make $36,000 a year. You take half of that off, you're going to be making 18 grand net a year. And so you're going to appreciate over time for real estate. It's going to outperform the S&P and the NASDAQ most of the time in terms of, but it's certainly not passive is the problem, right? So it's a lot of work to make these returns. And in the end, when you net everything out, you're probably earning about 11, 12% a year, which is good. But considering how much work a rental property can be, it's not that good. You know, sometimes the market's going to outperform it. Sometimes the S&P is going to outperform it. And so, you know, and again, that's with me taking half of the rental income away, which I think is certainly realistic when you take into account insurance and taxes and all that stuff, you know. So it's profitable. It's not easy, and it's certainly not passive. Yeah, Airbnb's fine. You know, the thing about Airbnb is you have to find a unique enough place to justify Airbnb. Seasonal Gardens. Yeah. My wife has a nickname. I affectionately refer to her as the plant murderer. She will buy all these plants, and then within a couple days, you know. All right, so yeah, so MU has their earnings report. Again, we do have Meta Platforms doing its Connect Developers Conference today. Ooh, we'll see if we cover it or not. I don't know. It's been a busy time. I got a lot of stuff I got to do, to be honest. I got a lot of personal stuff going on. Not bad, but busy stuff. Like I said, we're closing on a rental property soon, and like we got a lot of stuff happening. So, and UK rentals are not worth it anymore. What are the tax life? What are the taxes like in the UK? College towns, parents are using Airbnbs. Yeah, Airbnbs could be nice, you know. College town is probably necessary, yeah. Yeah, Cal. My wife has gotten noticeably better too. My wife's problem is like she buys plants impulsively, and in the end, what ends up happening is like we get really busy on stuff outside of our house. Like she buys plants, she puts them outside, she waters them, everything's good and fine, you know. But then like something happens, we go on a vacation or something else happens, and then they just end up, you know, not making it. What's the tax rates in the UK? And again, if somebody thinks my numbers are wrong regarding rental property, speak up. Let me know. You know, I'm open to talking about it. But from my experience, that's about right. You know, like you're gonna lose about 50% of what your rental income is. So if your rental income is $2,000, if that's what you're charging for rent, you might as well knock 50% of that off, right? So you're gonna net about $1,000 of that with taxes, insurance, expenses, you know. But again, the good thing is that like percentage-wise alone, over a 10-year period, you're gonna earn over 10% a year throughout all that stuff, right? So like there's benefits. Yeah, 30% of the time I'm wrong every time. Rentals, forgot to mention squatters' rights. Well, 100%. I'm in Texas though, and I don't have those problems. I would never buy a property in New York or, you know, anywhere that has squatter-friendly laws, just because people take advantage of it. People are people, and so they take advantage of it, unfortunately. All right, guys. So yeah, people are people. They take advantage of it. All right, guys. Sorry, I had to, do some stuff. All right, I love you. Hey, buddy. All right, sorry. I had to give my kids. All right, baby. All right. I love you. What's up with Rivian? I don't know. I haven't really seen Rivian in a minute. You know, Rivian down to 1180s. Oh, yeah, no, I'm not renting to friends or family. They're just not worth it. 30 to 50% taxes. Eee. Yeah. 20 to 40% is mainly the issue with renters' rights. 20 to 40%? I'm talking about property taxes is what I mean. Like an example of this, again, like property taxes here in Texas. You know, so again, and I'm not, like, people get weird, you know, you talk about both sides and people get offended. People talk about Texas like freedom, you know, but again, Texas in some ways is some of the most restrictive states. There's one, like, in terms of, people are like, yeah, Texas freedom, but there's no ballot initiatives here, right? Like, they lock you up for cannabis. Like, there's just problems, right? It's certainly not free. You know, it's just marketed as free. You know, now what Texas really has going for it is taxes. Like, Texas income taxes, there's no state income tax here in Texas, which is a huge thing, a really beneficial thing, of course. There's no state income tax, and that's a powerful thing, you know. But they make it back some in terms of property taxes. So, like, most of, let me see what Texas is. Average property tax. So the average property tax is 1.6%, which really isn't that bad. But if you're not careful where you buy the property, it's going to be higher than that. You know, it's going to be higher than that. So, you know, you got to make sure you buy a property in a place that has a reasonable tax rate. You know. Yeah. Yeah, so that's not too bad. So again, and the property where, I've already checked this, I just wanted to make sure, the property that I'm buying has a tax rate of 1.6%, right? So again, to put it into perspective, you buy a $500,000 house, right? You buy a $500K house, you're going to be paying, you're going to be paying about $8,000 a month in property taxes. So you're going to be paying about 0.016. Yeah, you're gonna be paying about $8,000 a year. I'm sorry, in property taxes. So every year, if you buy a $500,000 house, you're paying about $8,000 a year. And so again, if you're not careful, but some places in Texas it's 2.2, 2.3. Some places it's 2.4% property taxes, and that is a much different thing. So you buy a $500,000 house. Imagine paying $12,000 a year just in property taxes alone on a $500,000 house. Like, it adds up quick, right? It adds up quick. Hey, later, Sam. Oh, man, there's no property tax in the UK. That's nice. How much do you make in an average month trading? I don't know. I don't even claim to be a good trader, math. So, yeah, like, I'm not an investment professional. I'm definitely one of the top 3-ish worst and best traders of all time ever in the world. I'm not an investment professional. I'm not liable if you lose money. You always got to make your own assessment. Trade responsibly here, guys. Understand, not an investment professional. I'm not liable if you lose. I'm one of the top 3 best and worst traders of all time ever in the world. I trade off stream. You're not going to see all my trades. Understand, CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Don't sue me, basically, is what I'm saying. We're going to try to do a day trading show today. I've been kind of experimenting with it. Doing like a pre-market show and then kind of pivoting to a day trading show. We're going to try it and see what happens. I wish they would give me the schedule for the Robotaxi event. wish they would give me the schedule for a robotaxi event. Alright, so yeah, GDP data updates tomorrow, along with core PCE inflation gauge Friday. Will this cause moves? I don't know. All right, so look at Nvidia, guys. Nvidia just broke pre-market highs completely. Got all the way up to 122s almost. Rental property sucks because it takes almost a year to evict a non-paying tenant. Not in Texas, I think. Yeah, so I've never really had that situation in my experience, but yeah, in Texas it takes 3 to 6 weeks. So I mean, that's why, you know, Texas, freedom. But yeah. So you have to give the tenant, a landlord must give a tenant 3 days notice to vacate unless a different time period. Filing for eviction takes 7 to 10 days. You have a court hearing within 2 to 3 weeks. And then 5 days after judgment, you have a writ of possession and final eviction. So yeah, total time 3 to 6 weeks. Not that bad, really. Yeah, we got Powell tomorrow, too. I completely forgot about that. Again, people have to understand the benefits. Like the problem is that traders are marketed all these get-rich-quick schemes and stuff. And the problem really is that, like, look, guys, very rarely are you going to be able to get rich in anything. All right, so we just made another $100 and something here. We are trading, let me see. Yeah, so we are trading this live here. Now we're actually red. I'm going to add size back. We got 2 contracts here. And again, we're going to be day trading live today on an actual day trading stream. So just bear with me. Oh man, I looked down for a second. I was I looked down for a second because I was trying to update some stuff. Y'all yell at me if I start to lose too much money. Alright, so now we're down. So we popped up a little bit. I'm gonna go ahead and take half of this off, right? So I just took half of that off just to lock it in. So that way I can be loose on the rest and maybe make my money back. Let me get redirect ready. Also, we're going to throw it in sub-only mode, so if you haven't already, subscribe, chat. We're flat on the rest of this position. Yeah, tomorrow we got Powell speaking early. And if you haven't already, again, I'm day trading on Top Step right now. Top Step is a funded futures program where they give you a demo. They test your skill with the demo first. If you pass the test with the demo, they fund you with a live account between 50K up to 150K with a 90% split. Again, if you want to get funded in futures, I'm going to have to cut this. We're down. Again, though, we've had a pretty good string of trades, so we're okay. We're green in this account. But if you want to get funded in futures, Top Step is one of the single biggest edges in funding right now. Again, here's the reason why. If you want to maximize value in a funded account program, Top Step's the way, right? The reason it's the way is because there's so many different things that help you not only get funded, but stay funded. Number one is that there's 0 commissions on Top Step X. And so if you're going to day trade, trading on Top Step X makes the most sense, right? Why? Because there's absolutely no commissions. I can take these trades if I buy regular contracts that aren't micros. Regular E-mini, it's less than $3 in fees, 0 commissions. If I buy micro contracts, which is really how I like to trade once I'm funded, I scale down to micro contracts. It's a tiny amount per trade. I think it's less than $1, to be honest. It's like 79 cents per contract. So it's a tiny amount, right? And what I like to do is get funded, and then once I'm funded, scale down to micros. And that's where I can really, I can use up to 5 contracts there. So that's when I can really build up these much larger amounts of profit for my trading. And I can trade small. I can make $20 a trade, $30 a trade, $40 a trade, and still profit, right? And again, the commissions are so small that it ultimately allows me to trade small, and that's a powerful thing. Once you're funded, you can protect that account, stay alive longer, build up cushions of profit, and again, that's one of the reasons Top Step is such a powerful platform. And again, they are a sponsor of mine. They pay me money. I'm biased because of it. Again, Top Step gives you a demo. They test your skill with it. If you pass the test, they fund you. If you fail it, you only lose what you pay for it. Just genuinely a good option. And again, I'll put the link up. If you want to help support your boy here in this channel. You can check them out. They are a sponsor and affiliate of mine, so I am biased in their favor for sure, because they pay me money, which is, most people going to be biased just like me. But you can check out the link. You can also click and drag stuff, which is cool. And this is a challenge account, so this is a combine account. I'll have to try the click and drag aspect of it too. I'm going to have to mute the music for a second. All right, we got 2 contracts here. I'm going to sell this. There we go. All right, so we're up. All right, so we just scalped we made our money right back. Yeah, so again, we made our money there. So look, we built that profit up. It took us a little while, but we did it. All right, look at this big move up. S&P. All right, so all right, chat. So Nvidia is testing the highs at 122 again. All right, so we're going to undo the music for a second here. All right. right, wouldn't be surprised if Nvidia rolls through 123.50. It got to break 122 first. You can see 122 up here. It has to get over this level first. Look at the market rebounding up. So we did make our money. All right, so SPY at 571.15s. All right, guys. So we're at 121.70s. Yeah, I'm going to have to unlock the, there we go. I would discount the rumor of Nvidia buying out Supermicro semiconductors. Yeah, I mean, there's going to be a lot of rumors floating around. I don't know if it's good or bad or not. I can hear. I'm feeling bearish in the queue. Yeah, I mean, it depends on what Nvidia does. Nvidia is going to be the weight of it. Like, Nvidia has to break 122 to continue going up. Nvidia is going to influence the whole market. Rivian, again, the problem here with a lot of these EV brands. Somebody asked me about Rivian. The problem with a lot of these brands is that they don't have enough people interested in buying standalone brands. You know, the companies that are going to succeed in EVs, like, you got to think about consumer behavior is the easiest part. Like, regarding EVs, you have to think about consumer behavior. What do I mean by consumer behavior? What I mean is that you have to put yourself in the consumer's shoes and imagine that you didn't trade stocks at all and you had no idea about any of these stocks, and you just wanted to buy an EV. Okay, there's two paths the consumer can go if they're trying to buy an EV. Right? What is one of those paths? One of those paths is a Tesla. You know, that's one of the paths. Freaking Tesla, right? Like, that's what a lot of people are going to freaking do, is they're going to buy a Tesla. That's one of the paths, just direct to main EV producer, Tesla. The other path is not Rivian. It's not Lucid. It's not Polestar. The other path is buying one of the legacy brands EVs, right? So buying a Mercedes EV, buying a Tesla, or buying a Dodge EV. You know what I mean? Buying a GM EV, buying a Ford EV. Right? Like, that's the path. And so those are the only two realistic paths that have high consumer interest. Okay? One of the, like, what doesn't have high consumer interest is standalone EV brands like Lucid, like Polestar. Polestar has a better chance than Lucid or Mullen or something like that. But I wouldn't necessarily say Rivian has a good chance. Like, Rivian, I see Rivians in my area too. They do have a niche, right? They have a niche. They produce trucks and SUVs. And they're really the only people doing that in any heavy way, standalone. And so I think they have a niche. They have a niche. It doesn't mean they're going to be successful. And just the amount of consumer interest is, if you want a brand to be a big growth stock, it's low. You know, that's the issue with it. But again, we'll see what happens. It doesn't necessarily mean it will fail. You know, there's still a big chance that it succeeds. You know, I think it's risky to buy. Yeah, I see Lucids maybe once every 3-4 months, which means they're not selling many. You can look at the production numbers regarding Lucids. Rivians, I certainly see a lot more. In my area, I see a lot of Rivians. I see one every day. Or not every day, I'm sorry. I see probably one Rivian every week, I would say. I see about a Rivian a week. And then that is just not a big enough interest to succeed as a big company. Like, why the reason Tesla is so successful is because every time you walk outside, you're seeing a Tesla now, which means that consumer interest is very high, and it has been. I can't really say the same thing regarding Rivian. Although again, I think Rivian's under Tesla. It's not that Rivian obviously is not doing as well as Tesla is, but it's also not doing bad relative to the other EV brands that are out there. So I don't know. Yeah, and that's why I said I think a lot of businesses are going to use Rivians, and I think Rivians, you know, they have a chance versus some of the other ones. So. Yeah, so I'm looking at Monday and Tuesday next week now. We got the JOLTS report coming out next Tuesday. Chicago PMI Monday. Wednesday, we got ADP non-farm, jobless claims, ISM factory numbers. So we got a lot of stuff happening again, but Powell this week is going to be massive. Yeah, I mean, honestly, Brad, you might be actually correct. So what Brad says here is that comparing apples to oranges, in a sense, Rivian doesn't have an affordable mass-produced car like Tesla, the Model 3. Compare how much you see a Model X and S to a Rivian, and that's more comparable. 100% agree. And again, maybe that was a flaw in my original mindset. So if so, my apologies. I'm not trying to hate on Rivian, and I actually do see Rivians a fair amount here. You know, and I like them, right? I like their trucks. They look dope to me. I think they're cool cars. I think they're cool automobiles. I still think consumer interest is much lower than Tesla, of course, and I think that's a flaw that they don't have a cheaper mass-produced vehicle. And I think that's one of the reasons Tesla is so successful and Rivian isn't quite as successful in terms of specifically share price, is because they don't have that, right? And so I do think like that kind of also proves my argument a little bit, Brad. But I do understand your point, which is Brad's point is basically that, you know, Rivian is mostly specifically trucks and SUVs. Those are more expensive than like a Model 3 for Tesla, which is cheap, and so it's easier to afford. So naturally, you're going to have more volume buying Teslas, that the cheap Teslas, where a more accurate look would be to compare one of Tesla's bigger, more expensive vehicles versus a Rivian, which is more parallel in terms of comparison. I get that for sure, you know, and again, maybe I'm wrong. Nvidia near 122. Yeah, we're watching it. We'll see what happens. Need companies to be affordable. Yeah, I mean, it depends on the niche. It depends on the niche. Yeah. All right, guys. So we're going to be pivoting to our day trading stream. So again, stick around. We are going to cut to our day trading stream. Yeah. We'll cut to our day trading stream and see what happens here today. Yesterday, I think we came out ahead. So I do think we came out ahead. And today, hopefully, we come out ahead today. It doesn't mean we will, but as soon as we cut this stream, it's immediately going to bring you to our day trading stream. If you want to follow the link directly to the day trading stream, I'll put this link up. You can join us there. Here's the day trading stream link. There's the link to the day trading stream if you want to follow me along there. But again, as soon as we close this stream, it should immediately pivot you to the day trading stream. If it doesn't, you can go to that link right there. Check it out. We are going to be day trading the New York Open and futures, and you know, and we'll see how that goes. I'm ready for it, chat. I'm ready for it. We'll try to day trade the New York Open. Again, yesterday we had okay, like measly results. I'm not even going to say it was great results, but we had decent results. We had okay results. We'll see if the market breaks highs again. Well, the Rivian says I see around 2 per week, but mainly trucks. Well, yeah, I mean, that's what they are, is they're a truck brand. You know, so they're a truck brand. That's what they're going to be. It's mainly trucks. But again, I'm going to close this stream now over. We'll see you guys over there. Good luck.